Hello, ETF fans. This is Will Smith with ETF Action. Today is August 8th, 2024, and for today's video insight, we're going to showcase how to quickly build an illustrative 60/40 model using ultra low cost ETFs that provide diversified asset exposure to select markets within the universe. So first, we are going to identify low-cost, highly liquid ETFs for select asset classes using the ETF Navigator. Then we're going to build out our model using the Model Builder tool. So, starting off with the ETF Navigator, we are going to focus first on expense ratio and then also notional ADV. So we're going to get rid of total return and flows from the Navigator. We're going to open up key stats and bring in notional ADV. Here you can see averages for each category in each composite, but we're going to go down to the ETF level so you'll actually get some ETF specific data. We're going to start off with US large cap equity. So first, size and style US, large cap blend. We're going to sort by expense ratio. So here we can see we've got a bunch of very cheap large cap US blend ETFs. We're going to go with SPLG for that one. Moving on next to mid cap blend, we see that SPMD is a great option with a 3 basis point expense ratio, plenty of liquidity. On to small cap blend. Again, we've got SPSM with that 3 basis point expense ratio, solid liquidity. So that will take care of the US side. We're obviously going to want some exposure to developed markets and emerging markets. So here we're going to go to size and style global ex-US, open that up. And then we've got large cap blend. So again, seeing a theme here with the spider ETFs, but we've got SPDW, again with that 3 basis point expense ratio. So that takes care of our developed ex-US exposure. Now for some emerging, we see that, again, SPEM, a little bit more expensive at 7 basis points, but again, plenty of liquidity. So that's our emerging markets. So that'll take care of our size and style equity exposure. For any 60/40 portfolio or model, we always like to see some real estate in there, just to include plenty of diversification. So here we've got our Schwab US REIT ETF with that 7 basis points, plenty of liquidity. Now heading over to the fixed income side, we're going to start with the inflation protection, get some TIPS exposure there. Here we've got SCHP, very cheap at 3 basis points, plenty of liquidity. So that'll be our TIPS exposure. And then lastly, we've got to get some core in there as well. Ag is always a good choice. Largest fixed income ETF on the market. So that will be our US multi-sector fixed income. Let's also throw in some commodities, multi-sector, broad market. Here we're going to go with one of the more expensive, but absolutely the most liquid within the category, PDBC. So your very diversified commodity ETF to give us some exposure to commodities. And then lastly, given the recent surge in popularity of the category, we're going to throw in some cryptocurrency. And we're going to focus on Bitcoin just because they've had a little bit longer of a life cycle. We know that there's been a slew of launches on the Ethereum side, but for this example, we're just going to choose FBTC, given that it still has solid liquidity and for the time being is waiving its expense ratio. So that is how to use the Navigator to quickly identify some cheap and highly liquid ETFs within select categories. Just for your reference, I've built out our category here, our ticker that we selected, the expense ratio, also included a cash component at 2%. And then I've gone in and built out a weighting system to give us that 60-40 equity fixed income blend. So moving on to the model side. We've identified our ETFs. Now it's time to build our portfolio. So under the model tools drop down, select the model builder. I'm going to choose the model. Here, the parameters screen, just for your reference, only these top 4 parameters are required to create your model. So for the time being, I'm going to do 60-40 multi-asset test. Model type is already selected for you. Rebalance frequency, I'm going to choose quarterly for this example. And then benchmark, this is purely for a comparative standpoint. This can be changed after the fact. So for the time being, I'm going to do AOR, the iShares Core Growth Allocation multi-asset ETF. Again, all of these other parameters are settings and for your reference. So they are not required to build the model and can be updated after the fact on the model manager page. So to recap, we've got our name, determine our rebalance frequency, got our benchmark in there. Now we are going to input our model positions. So for time's sake, I have built out our CSV upload file for the model builder. So for ETF action, the required format is ticker and weight. These weights need to add up to 100 opposed to 1. And then we're going to save it as a comma delimited file. So again, all I did was take our tickers from the screen that we built out from the ETF Navigator, and then our weights, and I dropped it into a CSV file, and I saved. So now that we've got our CSV file built out, we're going to upload a CSV. So here, we've got our test model, open, upload. Now, for models with a set rebalance frequency, that being daily, monthly, quarterly, or annual, the inception date is determined by the earliest common inception for all holdings within the model. So for this case, because we included FBTC, this inception date for the time being is limited to January 2024. Now, that said, I want to extend the back test of my model a little bit. So I'm going to add in a proxy holding for FBTC. So for this case, I'm going to just choose the blockchain ETF, BLOK. Again, that is purely to extend the back test of our model. Now, so we've got all our tickers in there. We've got all our weights. We added in BLOK, again, just to extend that back test. Now we're going to press submit to create our model. So here, we've got no errors. Now let's go take a look at the model itself. That's going to take us to My Marketplace. This is going to open up the model analyzer in the quick overview tab here. This is going to show you down below the current model positions as of yesterday's close, along with weight, TTM yield, expense ratio, and then some asset class breakdowns there. Additionally, there's a heat map with 1-day performance that is as of yesterday or the previous day's close. So was not a great day for the portfolio yesterday, but that was pretty much market wide. So from here, we can quickly go in, analyze the performance. So we can see this is actually done extremely well relative to AOR. It's kept pace pretty well. But one thing that's very important to notice here is up top, this acquired fund fees. Our focus for this model was extremely low cost ETFs that were highly liquid. So a 5 basis point acquired fund fees is extremely low cost. And it's a great illustration of how we can utilize the ETF Navigator to identify low-cost ETFs that can provide us broad asset class exposure, as well as build a diversified model. So we can again see over 5 years, it's done very well against AOR. We can also quickly go into the risk stats on a 1, 3, 5, 10, and since inception basis, as well as a composition relative to our benchmark. You can also have this broken down by equity and fixed income to really get detailed analysis of what exposures this portfolio provides. We also have fundamentals, again, on the equity and the fixed income side. And lastly, we can run some tools and reports or launch back to the ETF database or other tools within the platform. So that was just a quick overview of how to identify ETFs that may be of interest when building a model. In this case, we use ultra low cost beta type ETFs to represent exposure for the different asset classes. We identified those ETFs using the navigator. Then we built out our model using the model builder. For your reference, we have also built out the ETFA illustrative model marketplace under the sponsored marketplaces. Now here we have built several different series of models, all ranging from 0% equity all the way up to 100% equity, all with a different focus. So you can see we've got active, we've got alpha, beta, covered call, dividend, ESG, and even a few buffer ladder models just for your reference and for showcasing purposes. Again, these are all illustrative models and are a great tool and resource for model building and showcasing idea generation for your model building purposes. Very important to note that the ETFA illustrative marketplaces are available to all confirmed financial professionals with accounts on ETF Action. And we encourage you to go out and play around with the models, explore, and please do not hesitate to reach out with any questions. If you're interested in a demo, shoot us an email at team@etfaction.com. Really hope you enjoyed today's video and have a great day.